All right, guys, got the fluffy jacket on. We just got off of a 5-hour stream. We watched the market drop almost 800 points live, so that was cool to watch. It's been insane. I want to talk about the reasons why, give the updates if you guys have been following along with the videos. It's been an awesome day so far. Getting the cash out of a lot of different stuff, seeing where I'm at. But you guys got to see on the stream, we lost. Pretty much it was like all losing plays yesterday. 500 bucks. I went over those plays, but now those value stocks came back up. There's a lot of things I want to cover. I want to show you guys. I want to talk about the plays, balancing it with the options, but mainly I want to talk about what made the stock market go down. It wasn't the gap down, what made it go down, and now it brings up this issue of the yield curve, which I want to talk about. I want to give you guys some insight. You guys are probably seeing this all over the news, and there's still Power Hour coming, so I'm sure a lot could happen in this hour. Trump hasn't tweeted or anything. Stuff could come out. I want to see, but I'm pretty solid. This is why we're seeing the market down. I was ready to get bullish on it, and like we were saying, it was good, but everything that we're saying could make the stock market gap down pretty much happened. Everything blew up, but we're doing good. Like I said, in those plays, I want to talk about, I realized 1,500 there, and then up another $1,500 holding some of the puts I got. And you guys saw we even sold premium on the account on the other one. I did all this on the stream. You could go watch the 2 days of streams. I talk about literally every play I made, every single thing. So go watch it if you guys haven't. Now, let's talk about this big move and what went down. So, one, Brexit is falling apart. We could pull up the pound. Let me get that up here. And again, this is the market. It's still moving live, like I said. So things could change. But the pound hit a low at one point. It kind of bounced back up, but pretty much they're talking about the deal falling through and other stuff. Theresa May, a bunch of issues. That's not looking well. Then there's this Trump thing, or excuse me, what was his name? Conor, the guy, Saudi, or what did they say to Russia? Who was it? Bolton? I think it was Bolton. But he said there's a 60-day deadline for the arms treaty on Russia, and that could pretty much bring us back to the cold fucking war. So that could have an effect on oil. But then oil went down, came back up, Brexit, but now the Chinese-Trump truce talks. That's the first thing. The two big things are that, how it relates to the currencies. It's changed a lot of values around. Then this yield curve, which I want to go over. But starting with the Trump part, what happened is, well, maybe actually we'll go to that. Let me talk about the yield curve, because this is where you guys are going to see stuff. Here's the yield curve. So what the yield curve is your bonds. And this is 3-month, 2-year, 5-year, 7-year, 10-year, 20-year, 30-year. So these are government bonds, the United States bonds. And pretty much here's how the philosophy works. If your short-term bonds invert if short-term bonds are higher yielding than long-term bonds, that doesn't make sense. Longer term is more risky, more time. Why would you get less money? So if short-term becomes higher than long-term, that becomes a problem. So the 2-year and the 5-year became inverted today, and now people are worried that the 2-year and 10-year is about 1 or 15 basis points away. That's not good. Why? Because every recession from 1980 till 2008, there's been a flattening of the yield curve. Now, that's not how you interpret it. I'll pretty much show you guys. Here was the yield curve coming into 2007, 2008. It was flat and inverted at the time, and you could see it. So I will make another video on this. It's very complex. It's easy to say, okay, the yield curve precedes a recession by like 6 months to 2 years, but how do you use it to time something? It's a mystery people have never figured out and tried to. We will discuss that more in other videos, but this is the problem going on right now with the markets, because this is it's related to China growth and all that, but it's the dollar going up. There's dollar strength today, and now the dollar strength is coming from China trade talks not going through, as well as the pound and the oil stuff. So this is all connected, and this is the type of stuff I look at, but now that's affecting pretty much global growth. You're having investors literally move into bonds, move into the dollars, and having certain functions go through where they're indicating something. And when certain things happen, that's not good. But that yield curve is coming into play now with the price of the dollar, everything else, and that's where now Trump comes into play with Xi Jinping and what happened. Because now, if Trump pretty much is saying, this is what we were explaining on the stream, because, we had somebody, one of the brothers talking, they're like, why? This doesn't make sense. I thought this is what the market wanted. We all did. It's just the deals now are emerging. Trump tweeted today, he's ready to make a deal, but he's a tariff type of guy. He wants protection. You guys could go see those tweets. We were reading them earlier. But essentially, it's pretty clear now that the deal wasn't there, in the sense that the deal we were told that was a deal wasn't really a deal. It seems now that it's getting along the lines as if Trump, they just made an extension, and it seems like it was better for both people because Trump knew it would hurt the markets. China was already doing bad. They did what they do. This is what they did with Brexit. This is what they did with the debt crisis, the debt ceiling, any big issue. They just keep delaying it. So that's what happened. And then now there's also reports that China censored the U.S. Embassy communications on what they were saying about it, and that they firmly reject what the U.S.'s narrative about what happened at the meeting. And again, that's the problem, is that all of this stuff from the meeting is now backtracking. That's why we've backtracked the gap down. We're down 1,000 points since the run-up in the last 2 or 3 days. And it's because the market thought we had it. That's why we gapped up. But then we started to fade as more and more info came out, more confusion from the auto tariff side. And then eventually now it's still up in the air. So the market thought it had something, it went up, but the market vomited it all back up. That's not what it wanted. That's not what we were looking for. It doesn't, and now this just adds more to the global growth concerns from China slowing down stuff, and this is where the bigger issues come into play. It affects the values of currencies, and now we have Brexit and oil and all this stuff. It is now coming back to light. That is what we were looking for. Brexit has advanced more in the last 24 hours. Oil's kind of slowly getting there, but the tensions with oil, Saudi, and Russia all combined, and now there's just so many things smashing together right now or having the potential. But it seems the main reason down, this backtrack of the Trump talks, and also now this yield curve inverting for the first time in 2018. And this is the first time it's inverted in the last 10 years, actually, at any level. So it could bounce back from that. And a lot of people with the yield inversion, it's easy to panic now. You got to understand what that means for, that's just sparking things for computers, buying and stuff like that. So obviously there's that big difference, but it could flatten and invert here and there. You're not going to see an effect immediately where the market crashes or immediate recession. So please understand that. But that is definitely coming into the first time it's having an effect on markets. I'm going to be surprised to see what they report the news as. I'm getting my bearishness on, and again, like I said, with the puts, you guys see I lost $500, but the implied volatility, like the VIX yesterday, the VIX right now is at 20. Oh wait, where'd it go? There it is. VIX is at 1960. It was at 20, but it was at $16 this morning and yesterday. So the VIX shows you indications about options. The VIX is actually letting you know put versus call ratio. So the higher the VIX is, the more puts. The lower the VIX is, the less puts. So the premiums were really low. They got killed off on puts. So you could have made a lot. Even though I bought a lot of calls and I lost money on them, I made all that money back and more through the puts. So that is how you could hedge, straddle, call it what you want on it. But it's understanding, implied volatility in the prices and where you're going to be able to take advantage of them as a trader. So coming forward, this is going to be interesting. The market's going to be closed tomorrow. I was showing this on the stream based on any one of these days. Literally, we haven't seen this in October, a big 600-point type day. The chances of us following through with a gap up or down, it's like 50%. You have big day, continues on, another big day, gaps up, comes down, goes up, gaps down, comes up. Similar type thing. So it's hard to say, but this is true volatility. Oh my gosh, I forgot to say my last part for you. Here's another thing. It's just there. I'm going to pull it up. I've showed you Wall Street Journal. I'm typing it up on my other screen. Hold on. I only have two hands. Highs and lows. So that's what I searched. You guys could bring this up. Wall Street Journal, highs and lows. And look at the market breadth. So this is showing you the New York Stock Exchange. Stocks hitting highs and lows. We have 73 highs today and 317 lows. The thing is, I believe the number is either 72 or 86 or 96, but this is still close enough for me, but it's almost there. I believe it's 72, that's why I'm saying it hit. And we could go back in other times and see where it is. Let's see, Monday. Monday was 76 highs, 128 lows again. Today is more bigger, but what it's telling us is that we have stocks hitting lows, a 2-3% of stocks hitting lows, and then more than 2 or 3 hitting highs at the same time. That is clear. Investors don't know what the fuck is going on. There's separation. That is true volatility. So when that occurs, that is a warning that there's going to be volatility in the following markets. It's kind of like one of those down Friday, down Monday statistics, but it's going to be interesting. So we're seeing that. And what else was I going to show you guys with that? I had one more cool thing to show where this data is kind of, go watch the stream, go watch the videos I talked about with the value stocks. That's the next thing. Look at Johnson & Johnson. You guys see the stock market's down. It was up more. It's still there. It's still up about 1%, $1.30. But McDonald's went up. They've all kind of came down as the market dumped 700. But even then, all these stocks are still green. And that's what I wanted you guys to notice. I made that video on what to buy during a crash. Look towards value, and I want you guys to see how that is, because again, some of the calls I bought yesterday, and this contributed to my profitable day today. They were calls in Starbucks, McDonald's, Johnson & Johnson, Starbucks. Why do I keep saying Starbucks? I just really like it. Johnson & Johnson and McDonald's. So, yeah. But I'll leave it there. Things could change, but hopefully you guys had a good day trading. If you guys came in the stream, awesome. I'm glad you did. We're going to have one maybe tomorrow. Market's going to be closed. I might come on for a little bit, but we will market open on Thursday, so be there. Subscribe, like the video, give me a comment. Let me know what you guys think it is. If you need clarification on any of this, I'll love to answer it. I love you guys. Stay in school. Do what you want. Just stay in the markets and stay away from blowing up your account. I think that's what we should say. You should stay on. All right. Love you all. Peace out.